Hey everyone, Coach Investor back to another video for today. So let's talk about 3 AI companies that are not named Nvidia that should definitely be on your watch list or maybe already in your portfolio. Now, one company you've definitely heard of, the other one you might have heard of, and the third one, which is the one I'm going to start right now, you probably never heard of because it's also a company that has a market cap of under $500 million. And that company is called Soundhound AI. Now, Soundhound AI bridges the gap between humans and technology through the power of voice. They help devices understand us, enable us to interact with them naturally, and unlock new possibilities for voice-driven experiences in various aspects of our lives. Now, Soundhound AI's technology works in 25 languages and is protected by 120 granted patents, with another 140 pending. Now, the management believes the company's total addressable market will surpass $160 billion by 2026. An example of how their product is helping companies, well, a collaboration with hamburger chain White Castle yielded drive-thru orders that were processed in under 60 seconds with a 90% order completion rate, exceeding staff-based benchmarks. Now, of course, as you can see, this company has partnered up with plenty of companies in various industries throughout the years. Now, looking at the major overview and what the analysts are expecting in the coming years. So first of all, it has a market cap of $473.4 million. One share will cost you $1.85. Now, currently, the expectations for fiscal year 2024 and 2025, sales growth of 50.5% year over year for fiscal year 2024, and then for fiscal year 2025, another 36.19%, while still being unprofitable. Now, currently, there are 5 analysts covering this company with an average price target of $4.52, representing 144.32% upside. Now, if we go back and look at their latest earnings report, we can see that revenue increased 19% year over year, while cumulative bookings backlog increased 13% year over year, which I believe was also a decrease quarter over quarter. So that's definitely something to look at. But if we're going to look at outlook in just a second, you will see that the company will accelerate their growth. Now, with regards to the bottom line here, net loss for this quarter was actually better by 33% year over year, but still a loss of $20 million. Now, how long do they still have until they run out of cash? Well, they still have around 5 quarters or so if that burn rate stays the same, because right now they're sitting on $104 million. Now, if what they say is true, this should be enough, because they say here, business outlook 2023, for the fourth quarter, they expect revenue to be in the range of $16 to $20 million, so quarter over quarter, and a nice little increase there as well. The company also continues to expect to be adjusted EBITDA positive in the fourth quarter of 2023. Now, whether or not that happens remains to be seen. Now, before I finish it off with this company, I just want to show you the 3 pillars which they mentioned during their investor day. So pillar number 1, select market opportunity, in this case here, automotive, which they've partnered up with all of these companies. Immediate opportunity, this increases the penetration with existing customers. This is basically the number. This was for 2021, the total addressable market there. But then if you look at the 2026 total addressable market, that opportunity becomes a bit bigger as well, increased penetration by around 15x, while more than doubling the customer base. Of course, they need to execute to reach those goals. Next up, pillar number 2, restaurant opportunity. In this case, in 2021, global restaurant total addressable market is around $2.5 trillion. We've seen those numbers approximately with the same companies like Square, Toast, which by the way, they've partnered up with as well. And they see here that in 2026, that TAM increases to $3.7 trillion. With regards to restaurants in the United States, 2021, around 1 million. And in 2026, they say it's going to grow by 60% until then. Okay. And then pillar number 3 is obviously monetization. Now, of course, there are many ways for them to monetize. They see here next opportunity, voice AI monetization provides brands new revenue opportunities to monetize their products and services through e-commerce, services, digital advertising. Now, of course, there are risks to it, especially since it is still a small company, especially since it is still unprofitable. but you've seen the market opportunity here. For your investment to be actually worth your while, they only have to take a small percentage of that total addressable market. Right now, with all the partnerships that they've done, with revenue that is increasing, I think it might be worth the risk. Of course, do with that what you want. And by the way, if it does become successful, it might very well be an acquisition target. So yeah, take that into consideration as well. Now, before moving into company number 2, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, we really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Now, company number 2 is called Datadog. Datadog currently has a market cap of $42.81 billion. One share will cost you $130.31. Now, what does Datadog do? Well, it's basically a cloud-based monitoring and analytics platform, leverages AI to identify IT issues and optimize performance. Their focus on real-time monitoring and alerting resonates with businesses increasingly reliant on cloud infrastructure, highlighting AI's role in managing complex systems, and we've definitely seen that with last quarter's results, beat across the board, even guidance as well. Now, what are the analysts expecting for the coming fiscal years? Well, sales growth of 22 and 26% respectively, 2024 and 2025. With regards to EPS here, for fiscal year 2024, close to 16% growth year over year, and then a reacceleration in fiscal year 2025, we have 26.35% growth year over year. Currently, there are 42 analysts covering this name. The average price target sits at $126.5, which represents a downside of 2.88%. Now, yes, if you look at forward PE, for example, it's 76.1 times, so very expensive. But as you've seen, this company is growing quite fast, top and bottom line. And if you look at the metrics right now compared to the 5-year mean, it still is way cheaper. Now, last quarter, revenue grew 25% year over year to $547.5 million. If you look at operating cash flow, that was $152.8 million with free cash flow of $138.2 million. Looking at the guidance for Q4, so the earnings season we're entering right now, they expect revenue to be between $564 to $568 million and non-GAAP operating income to come in at $129 to $133 million. For the full year 2023, they expect revenue to be between $2.103 billion and $2.107 billion, and operating income, non-GAAP, that is, between $553 to $557 million. I strongly believe that Datadog is one of those names that might be popular with some people that follow this industry or especially these types of companies, but is not spoken about enough, in my opinion. Quality company, quality management, quality product as well, and that's why it has been outperforming, and that's why you see those growth rates as well. Now, moving on to company number 3, and that's the company you all probably know, especially if you watch this channel. No, like I said, it's not Nvidia, it's not Tesla either, it's Palantir. Now, Palantir currently has a market cap of $36.51 billion. One share will cost you $16.78, has a forward PE of 57.5 times, which as you see is lower than the 4-year mean of 96.4 times. We know why. The company is becoming profitable right now. But even if you look at all the other metrics here, it is cheaper than the 4-year mean. Currently, there are 18 analysts covering this name with an average price target of $15.38, representing 8.37% downside. If we look at what analysts are expecting in the next 2 fiscal years, if you've watched my live stream with Arnie, you probably already know these numbers. So for fiscal year 2024 and 2025, approximately 20% growth year over year for both fiscal years. And then with regards to EPS, a bit of the same, 18.71% growth year over year for fiscal year 2024 and 21.1% growth year over year for fiscal year 2025. Now, as I've discussed that with Arnie in the previous video, we expect it to grow faster than just 20%, especially after everything we've heard with regards to bootcamps, with regards to the presentations, the customers using it, the results. We are expecting more than just those 20% year over year growth. And maybe that's why right now the stock hasn't really moved much in the last 6 months. That's because analysts are still waiting for another confirmation of, yes, growth is reaccelerating. We'll get our answers early in February. Now, I do want to mention a couple of things here. So, Palantir CEO Alex Karp said this: US eating everyone's lunch on AI. So he said, within 10 years, around 95% of the world's top tech companies will be American thanks to the US lead in AI. Why does it matter? Well, Karp predicted that in time AI will deliver very large GDP growth. But that will benefit only a handful of countries and companies, leading to political and social dislocation. A strong military gets stronger, strong software companies get stronger, people who are in a weaker position get much weaker. Yes, but a crazy political situation and GDP growth, that's much better than a nice political situation and no GDP growth. He then said something about Europe, more specifically Germany here. Any of the products we build would be the #1 startup in Germany, and we have 5 products. Again, this for me shows the confidence of management, meaning 20% growth is just not enough after everything they've told us. Again, we'll have to wait and see until they report their earnings. February 5th, we'll do that on this channel, of course. Now, last thing here, what are we expecting? Well, the guidance that they gave us is this: revenue between $599 to $603 million, GAAP net income, adjusted income from operations to come in between $184 to $188 million. Then for the full year, they raised their revenue guidance to be between $2.21 and $2.22 billion. They continue to expect GAAP net income in each quarter of this year, which was last year. They are also raising the adjusted income from operations guidance between $607 to $611 million. So there you have it. 3 companies, 3 AI companies, one very popular, one maybe a bit less popular, and then one probably that you've never heard about, but maybe worth your while. Do share your thoughts down in the comments below. If you own any of those 3 companies, let me know down in the comments as well. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.